Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chats. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Well, hello. Good morning, everybody. Welcome to Wealth Coffee Chats, folks. Good to see a few of you up and at it. Early birds, as they say, get the worm. Hey, morning, Kevin, all the way from Florida. Well, you're not up early. You might be up late. Anyway, good to have you here, mate, as always. Thanks for joining the Wealth Coffee Chat this morning in Australia, but evening in Florida. Justin, how are you, mate? There's Chris as well. Morning, Chris. Tim's in the house. How are you, mate? Fabulous to have you here, team. Thanks for rocking along. I'll do the quick intros and warm-ups while we're waiting for folks to jump on. Jason Witten's my name. Most of you know that, though. But if you don't, if you are new, as we say always in Wealth Coffee Chats, great to have you here. Thanks for joining. If you are new, give us a little shout-out in the chat. Let us know who you are, where you're from, what you're up to. Love to hear from you. Morning, Cole. Fantastic to have you on this morning as well. We've been doing the Wealth Coffee Chat thing for a little while now. And, why do we do it? Each morning around about 10 past 8, we get together these days with a bit of a 6-star team. We've got property managers, we've got finance brokers, we've got property investors like myself, talking about the idea of buying and building your property portfolio, folks. Going the distance. This thing's a marathon, not a sprint. We've got a couple of sayings around here. Buy well, strategically sell if you need to at some point, maybe, or just don't sell. That's sometimes easier. It takes time to build a property portfolio. But right now, at this time of the year, there's something going on, something that I think is always worth understanding, because we're always exposed to our largest expense when it comes to our world of creating wealth for ourselves. What is it, folks? Tell me in the chat. There's a few of you on now, which is awesome. Welcome. Great to have you here. Tell me, what's the biggest expense that takes money from our earnings, from our pocket, from our wealth, before often we're even allowed to touch the money? What's the biggest expense, folks, in most of our worlds when it comes to the world of wealth creation, cash flow, money, whatever that might be? It doesn't matter whether you're a business owner, whether you're a PAYG, whether you're a somewhere in between. The biggest expense, the number one expense, which we should all learn to minimize. Well, Luke, technically you might be right about owning property. That's for sure. Our biggest expense is our interest. However, our biggest expense in in life in general, when it comes to our wealth, is taxes, folks. There you go. Tax time preparation for interest. That's it. I love it. There we go, the taxes. So today we might talk a little bit about making sure, well, listen, for those who understand how to navigate this, like many of you do, tax time's actually not a bad time. It's a time to calculate how much tax we're going to get back, which is good. So that's what I thought we would talk about today. But what is the 4 taxes when it comes to the world of property investing, folks? Property investing, and what are the 4 taxes that that we're exposed to, and or we can minimize, folks? We've got an exposure and or minimize. So what are the 4 taxes? I've given you a little cheat sheet there. Tell me in the chat, what are the 4 taxes or the styles of taxes that we need to understand and navigate as a property investor, that we can use our property investing to minimize these taxes, sometimes delay these taxes inevitably forever, which means not pay them at some point. Chuck that in the chat for me. What are the taxes that we have an exposure to and the ability to minimize? All right, there we go. So let's have a look. The number 1 tax we all, what do they say? The 2 things that are certain in life, death and taxes. Yeah, 2 things in life. Hey, morning, Sonia. Great to have you here. Right, Chris is on it. Income tax, that's right, Chris. Your income tax, stamp duty. Now that's kind of not, it's a tax. Let's just face it, it's a tax. You got income tax, you got stamp duty, you got capital gains tax, so you got cap gain. Now, technically, folks, you guys have heard me say this before. Technically, there's no such thing as an actual tax that you pay when it comes to capital gains tax. It's a capital gain calculation that then gets applied to. You say, how much did I make as a capital gain? And then you apply it to the tax rate of your income. All right. So, but anyway, let's just say it's a capital gains tax, because that gives us a bit of an understanding. Income tax. How much income tax do you pay? Whether it's in your super, whether it's in your personal name, whether it's in a company or a trust or a combination of all 3. What are the taxes? How can you minimize those taxes? Stamp duty, certainly on property, is significant. I think it's ludicrous, personally. It's a scam as far as I'm concerned. I get a bit fired up about these taxes. It's a bit of a joke. Capital gains tax, and then last but not least, Cole's on it, your land tax. All right. So what's the strategies here? How can we minimize these taxes legally, effectively, and keep more money? Well, let's just quickly touch on that, and we'll come back to the income tax minimization in a minute, which is why we should all be calculating and understanding right now at tax time. Right, so stamp duty. How can we minimize our stamp duty, folks? If you know a tip or 2, put it in the chat, obviously. Play along if you want to at home, or wherever you are, at work or whatever it is. But hey, stamp duty. How can we minimize stamp duty? Well, there's a couple of different ways minimizing stamp duty. Number 1, can you see that? Oh, yeah, you can see that. Different states, folks. Different states have different calculations for stamp duty for the same value of property. Now, we don't have time to muck around and do that on online today. But if you were to buy a $750,000 property in Queensland compared to $750,000 house in Victoria, have a look. The stamp duty is different, anywhere between $3,000 and $5,000 compared to Western Australia or the Northern Territory or whatever it might be, folks. So, that's sometimes that, if you want a bit of a saving, and part of our strategy is diversification. So we're not doing strategy today, but, different states have different calculations. And number 2, you're dead right, Chris. Chris is on it. You can buy land and you can build a property. I really like that one. I am a big fan of that one, folks. Land and build. Okay, so the land is the calculation. The calculation for stamp duty is on the land purchase, not the total building purchase. Okay, which I like, which is fantastic. All right, how do we minimize capital gains tax, folks? How do we reduce the calculation of capital gains tax? Put that in the chat if you want to play along. There's a few ways to do this, depending on how you own property with capital gains, right? Number 1, your principal place of residence is 0, okay? 0 capital gains tax on your own home. That's kind of nice, right? Nothing wrong with that. Now, how you own properties, if you own property in a super, then there is a reduction in capital gains tax to 10% in accumulation while you're buying, and then 0 in retirement if it's all set up and you qualify, right? Which is fabulous. Okay, capital gains tax can be managed. Now, how you own your property, if you own an investment property in a trust, right? A trust, or your personal name, then you can get what's called the capital gains deduction, right? 50% deduction. Good morning, Geordie. How are you? Great to have you here. You can get a 50% reduction in the calculation, right? So you can get a 50% discount in what's payable or what's taxable. So if you made $100,000 gain, then if you own the property, if you keep it for more than 12 months, okay, then you only pay tax at this moment in time on 50% of the gain. So $50,000 tax-free, $50,000 taxable, and that 50 grand then gets added to your income tax, and that's how they calculate the dollars and the percentage ultimately, right? So how can we do that? We can minimize, we can keep our properties for longer than 12 months. How do we never pay tax, capital gains tax on our investment properties? You guys have heard me say this before. How can we not pay capital gains tax ever on our investment properties? Folks, put that in the chat for me. It's kind of a trick question, but I'm serious about it. Put it in the chat. How do we never pay capital gains tax on an investment property? Whack that in the chat for me. All right. Yeah, don't sell. Exactly, Cole. Right, exactly. There you go. Hey, listen, at the end of the day, folks, if you can buy good quality property that you're happy to own for a fairly long time, then capital gains tax should not be a real concern. Structure yourself properly, yes. Make sure you understand how you're exposed to these taxes and how you can minimize them, totally 100%. But listen, manage that as we go along. And there's another way to have a capital gains tax-free property if you're a business owner, folks. If you're a business owner, you can own a property as part of your business assets. And if you qualify, it's like 15 years in business and 7 years active assets. There's a few things. If you sell that property, then it forms part of a business sale and you can pay no tax on that property as well. Capital gains tax, by the way. So anyway, there's lots of strategies, there's lots of thoughts, there's lots of rules that you can use in your favor to minimize these taxes, folks. And last but not least, land tax. Actually, I've got a trick question. What state would you pay zero stamp duty? Here's an interesting one. What state would you pay zero stamp duty on, and what type of property is that applicable to? What state and what type of property would you pay zero stamp duty on $1 million property? Normally, across Australia, that would be anywhere from $35,000 to $50,000. What a joke that is. But anyway, that's just the cost of doing transactions with the state governments. But what state do you pay 0 stamp duty at this moment in time? Well, you get like an offset rebate anyway. Oh yeah, South Australia, first home. Yep, that's right, Cole. First home buyers under a threshold pay 0 stamp duty. You're dead right. That's across the whole of Australia, Cole. But you got it right. South Australia, as an investment property, ACT lease. Yep, Tim, you're dead right. There's leasehold and it's different calculation. And in South Australia, this is a trick one. South Australia, if you buy a commercial property, commercial, there's 0 stamp duty. Well, there's a rebate off the plan ACT for retirees. There's a good one too. ACT does make up its own rules, that's for sure. So understanding commercial, exactly right, Brad. Brad's on it. There you go. So, folks, you know, there are some ways to understand how to maneuver our money and our investing activity if we want to be efficient, and we've got some reasons to diversify in different states and different structures for our tax minimisation. Right, land tax. Boo. Let me hear it. Give us a big shout out, a boo. I tell you what, they get a bit greedy, I think, these governments. Land tax, you know, capital gains tax, stamp duties, rates, local rates. What a joke. Anyway, land tax, it's payable over a threshold. So what's a way to minimize the land tax or pay 0? Well, I tell you, folks, you buy in different states. Okay, different states. You buy in different entities / names, right? Because each person, so let's say myself and my wife, myself and my super fund, myself and my company or trust, they all have thresholds, like a 0 threshold for land tax, and also different states are not cumulative. You don't add up what you own in New South Wales and Victoria, and then that's the calculation. They're separate, okay? So that's fantastic, right? So understand land tax. Where can you pay 0 land tax at this point in time? Again, this is another sort of, no, it's not a trick question, but it's a fun question. The Northern Territory, NT, Northern Territory, doesn't have land tax applicable as you go. Right, so let's get to income tax. At tax time, what can we do? Folks, it's tax time right now. If you haven't done it before, you know you're exactly, Chris, as well, apartments for lower land content and lower land tax. Thanks for that reminder. All right, you've got tax time. You've done your taxes. What should you be doing? You should be getting some tax back from your properties, that's for sure. Now, what happens when we get that tax back? What do we need to do? What do we need to instruct your accountant to do, and then give this to your pay clerk or whoever pays your wages? What do we need to do, folks? We need to make sure we install a PAYG variation, a PAYGV variation. Why? What's that? A tax variation. Absolutely 100%. So, folks, maybe you've done this for the first time. Maybe this is the second or the third or the fourth property you added this year. Remember to update or create your PAYG variation, which means you get your tax back depending on your pay cycle, weekly, fortnightly, or monthly. Okay? You get your tax back as you go. You don't have to wait to the end of the year. And then what do you do with that tax, folks? You guys know exactly what we do. You get your PAYG variation, and where do you put that tax, folks? Because what do you do with it next? You get the tax PAYG variation, and let's say it's $100 a week. Let's say it's $5,000 tax back that you got from owning property and the expenses and depreciation and all those sorts of things. Well, we've got our $100 a week. We can get back, let's say we got $5,000 at the end of the year. Now what do? Boom, Chris is all over it. You put that, folks, in your offset account, okay? Offset account. Why? Because the bank charges you interest daily, okay? And if you leave the money with the ATO for the whole year and go, oh, it's a savings plan, well, how much interest does the ATO pay you? None, zero, right? Not only did you get zero interest from them having your money for the whole year, you paid extra interest on a loan that you could have your money sitting against, okay? So put that on the offset account. It reduces the balance and you pay less interest, folks. You pay less interest, that's for sure, okay? Now, there's a third opportunity here for those who might be in business and do the calculation, and you might be able to increase your amount of money that you pay yourself or distribute to yourself in business, okay? When you do the PAYG variation for those who are on payroll, you get to vary the amount of money that you receive each, the cash that you receive each week or fortnight or month. For business owners, you might be able to increase the amount that you pay yourself because you've got a certain amount of deductions you can offset. Now, depending on how you're paying yourself, whether it's director's drawings and then you'll do all the tax at the end of the year. Business owners, sometimes that's very useful, right? You get all of your money anyway. You put it in your offset account until the end of the year. Then you pay your taxes and offset your tax deductions, right? One of the things you've got to be careful of as a business owner, then the ATO will send you a notice to pay your taxes in advance, and you've just got to then do a variation to vary that tax in advance down or to zero. Anyway, that's for business owners. I'll do another one for business owners as we go. But there you go, folks. Wealth Coffee Chat done and dusted for today. There's plenty going on at the end of the financial year. So if you have got your tax returns done, it's time to check in, get your PAYG variations organised, and make sure any of these taxes that we need to navigate, reduce and minimise and make more efficient are all sorted. So tax time, chat with your accountants, chat with your team. And after you do that, by the way, folks, then it's time to check in with your finance team and see if any of the increase in value, rent for the year, tax deductions, maybe you've got some bonuses, maybe your borrowing power's increased. Check in on that stuff too. Anyway, there you go. All right, folks, that's it. Wealth Coffee Chat done and dusted for today. Thanks for joining. Fantastic to have you here, as always. Join us tomorrow. We shall do it again. Finance Fridays. The finance team are going to come and hang out with you tomorrow and talk about finance. So that one will be good, I'm sure, as well. There you go, folks. Yep. Boom. All right, folks. Good to see you. Thanks for joining. See you, Geordie. Cheers, Brad. Chris is already over it. Tim, how is the better ways to get tax done with multiple properties? Good conversation to have with your tax team, Tim. That's for sure. Add them all up and be able to do some good variations. Anyway, there you go, folks. I won't rabbit on anymore. Thanks, Brian. Good on you, mate. All right, folks. That's it. Adios. Bye for now. Episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.